Well, what we're hoping to talk about today is the new mandatory ownership reporting requirements, um, and basically go over what we as small business owners need to know come 2024 and beyond, with regards to the reporting requirements that the federal government is going to ask us to do with regards to each of our potential entities that we own. So it's not Steve has 5 corporations, Steve files once. It's going to be Steve files for every individual entity that I own. So it's something that I think we all need to be aware of. And it's just something that's going to come up really quick. So let me get this thing started by sharing our screen here. So mandatory ownership reporting and their requirements. Okay. What I really want to try to cover for you today, and this is going to be something that we're going to probably update a couple times during 2024 as more information comes in, is what is the Transparency Act? Who needs to do what by when? Who do we need to report? And the penalties. What caught really our eyes are the penalties. So I'm going to actually go a little bit out of order, I think, and I'm going to just show you why I think this is going to be such a big issue for us going forward. There is no filing fee associated with the transparency, filing the information. There's no tax owed with it. But the big thing that we have to be aware of are the penalties. So I'm going to start there and then see, show you why I think this is going to be such a crucial thing going forward. So the penalties for not filing or for filing the information report late, and it's really big. It's a civil penalty of $500 per day. So if we only file this once a year and we move somewhere in the beginning of the year and it's 10 months before we file the new information report, penalty $500 a day times 300 days, civil penalty could be as high as $150,000. So that's why I thought it's important to start the presentation with the penalties and start getting you familiar now, because really the reporting starts sometime in 2024 for you. But I think we need to be aware of this. There's also criminal penalties potentially if the government thinks there was willful filing or misleading of the government. That penalty could be $10,000, but the more important part is it could be up to 2 years imprisonment. So currently there is no cap on that $500 per day. So if you forget and it goes a year, year and a half, and you don't file, or the government says, hey, look, you were supposed to file in 2024 and now it's 2026, like I say, those penalties can get pretty substantial. And it's important to note that the penalty isn't just against the entity. It could be against any responsible party or person that should have known to file this document. So it could be the entity, it could be me as the president, it could be me as a 25% shareholder in a company. Just depends what we know and who they're going to go after for these penalties. So again, just trying to get you educated on why we need to be aware of this. And then as we go through the presentation, what companies need to report and who do we need to show within those companies. So again, there isn't much guidance on this. They haven't even come out with the form yet. They're supposed to come out with it January of 2024. But if it's anything like the FBAR, right, the FATCA reporting rules, not knowing about the law is not a sufficient defense to the penalties. So government sort of expects us to all know what we're supposed to do and then get it taken care of. Okay, so let's go back. What is the Transparency Act? So this is what's funny, and I think it slipped a lot of people's minds. The law actually passed in 2021, but it was set to start in 2024. So law passes in 2021, everybody goes into a slumber, and then all of a sudden it's like, wait, something we have to do next year. What do we have to do? And so this thing sort of crept up on a lot of practitioners. I think they said there was a study done, something like 75% of accountants and lawyers didn't even know that this was coming into play until just recently. So it sort of snuck up on the whole legal, accounting, and small business community. But it's something, again, like I said, we're going to need to be aware of because the penalties are just so large. So who needs to do what when? So let's start with the good news. You don't have to do as a business owner anything in 2023. The first reporting requirements are going to start potentially in the beginning of 2024 and then no later than January 1, 2025. So let's go through that. Any existing business right now in 2023 does not have to do anything, right? Any new business that we start up in 2024 will then have 30 days after setting up that business to file its initial report. So new businesses established in 2024, 30 days after establishment, they have to have this report done. If it's late, that $500 penalty could start to accrue. For our existing businesses, they have to report no later than January 1st, 2025. So again, our existing businesses are going to be filing sometime in 2024, probably towards the end of the year, right? But we're going to all need to file in 2024. It just depends when in 2024. New businesses, 30 days after they're set up. Existing businesses, no later than January 1, 2025. It sort of gets into a planning point. If I'm thinking about setting up an LLC or something like that come early 2024, depending on how much I don't want to deal with the beneficial ownership reporting, I may set it up at the end of 2023, right? Because a business established in 2023 has until January 1, 2025 to file. So just something to be aware of. I don't think it's going to be much because sooner or later you're going to have to report anyways, okay? So there's two things that we need to be aware of, two real definitions that we need to be aware of. The first one, what is a reporting company? What companies need to report to FinCEN about the business activities? And the other one that we're going to talk about a little later is who is a beneficial owner. So let's talk about reporting companies. So on my notes, I have just assume any entity you own is a reporting company is going to need to report. Okay, there's two types of reporting companies, foreign and domestic. My clients, all my clients, I'm only worried about the domestic reporting. I don't have any foreign reporting companies. But a domestic reporting companies are corporations. So any of our S corporations, C corporations are limited liability companies. So if we have a real estate holding company that holds our office building, and we have our S corporation being the business itself, then I'm going to have two potential reporting companies, the LLC and the S corporation. Okay, and then the catch-all is any other entities created by the filing of a document with the Secretary of State or similar office of the United States. So for 99.99% of us, it's going to be documents we filed with the Secretary of State to set up our business. One thing I'm unclear about, and we'll probably get more guidance on this as we go, or as I get a little bit more information on it, is general partnerships. General partnerships technically are not filed with the Secretary of State. However, they can be registered, should the owners wish, to document it with the Secretary of State. And I don't know if general partnerships overall are exempt, or they're only exempt to the extent they didn't file with the Secretary of State. So hopefully I'll find out something in that in the next month or two, and then I get send out a quick update on that stuff. So LLCs, corporations, whether they're S or C corporations, all potentially are considered a reporting company. Okay. Now, the government has come out with 23 entities, LLCs, S corps, C corps, that are exempt from filing. Sorry, my phone's ringing. And they put a list together. And so don't get too excited about the exemptions. And reading through the exemptions, very few of us are going to qualify. So I would start with the general presumption you're going to need to file for every entity you own, unless you meet one of these very limited exemptions. And I have a couple slides on this. So here's actually from the flow chart from FinCEN's website on the beneficial ownership information. And it's trying to tell you whether you're a reporting company or not. So if we go down the list, right? Under what law was the company created? US laws or so we're going to always look at the US column, right? Is the company a corporation? Yes. Maybe a domestic reporting company, right? Is it an LLC? Maybe a domestic reporting company. Was the company created by the filing of a document with the Secretary of State? Yes, it's going to be a reporting company. Again, every entity that we're on, just assume you're going to need to file as a reporting company. Okay, that's the best advice I could give you. Sorry about that. So, like I said, there's 23 exemptions. I have a list of those right here. And you can see most of them, if you look at it, securities reporting issuer, government authority, bank, credit union, public utility, insurance company. These are heavily regulated industries. And so that's why they're not required to file this, right? Because all their information is already public disclosure. And when you look at the list, the one I got excited about, number 15, accounting firms. So thinking, I'm an accounting firm, maybe I could find an exemption for myself. But I'll show you exactly how limiting these are, right? So accounting firms at the bottom of the slide, right? An entity qualifies for this exemption if the following criteria applies. And they will have these check the boxes for all 23 exemptions. And you have to check every box, yes, to fall within that exemption. That's why I say it sounds great. There's 23 exemptions. The reality is none of us, or most of us, are not going to qualify. I'll touch on the next slide, the one exemption that I think may qualify us for some of our clients, right? So an accounting firm, the entity is a publicly traded accounting firm registered in accordance with 102 of the Sarbanes-Oxley Act. So this act was put in place because of the bad reporting with regards to the Enron scandals and stuff like that. Obviously, we're not a public accounting firm. You can't go and buy and trade the law office of Steve Schroeder. I mark no, and I do not qualify for the exemption. Like I say, sounds really great, 23 types of entities. Reality is none of us are going to qualify, except for maybe a few. And the few will qualify under item 21, which are large operating companies. So large operating company, this, like I said, is the one that we have a few clients that are going to qualify under this one, but 20 or more full-time employees. Okay, that seems pretty straightforward. Full-time employees are located in the United States. Makes sense. The entity has an operating presence and physical presence in the United States. Yep, check the box. The entity filed a federal income tax, that shows gross receipts of at least $5 million. So this is our threshold. 20 employees, $5 million gross receipts, not profit, gross receipts. And then it gets into some clarifications. The $5 million of gross receipts or sales on the entity's, tax return, 1120. And if we subtract off any foreign income, the US based income is still $5 million. So like I say, $5 million, 20 employees, we have a potential exemption that we don't have to file this. Again, I think that the idea is the larger corporations are less likely to be committing money laundering. And that's really what this act is about. It's really about trying to cut down on money laundering, hiding assets, things along that nature. And they're probably thinking smaller businesses are more apt and set up to do this. For example, Steve Schroeder has his accounting firm here in Orange County, California, and I decided to open up a Nevada C corporation and funnel money over to that Nevada C corporation where the ownership is not registered under my name. And in exchange, I'm lowering my federal taxable income by moving it over to the C corporation, and I'm cutting California completely out of the equation, right? So now what happens is I have to file the beneficial ownership report for the C corporation that says, hey, look, Steve Schroeder really is a beneficial owner of both entities. And so now they could start to try to piece together whether money laundering or tax fraud is occurring. So that's really what this thing is set up for. Okay. So we know our corporation has to file, but who does it have to report? It has to report all beneficial owners, and they break beneficial ownership into two categories. One, substantial control over the entity, and two, 25% or more ownership interest in it. Seems pretty straightforward, but again, like I say, it gets into a lot of undefined or untested verbiage, right? And we'll see some of that as we go along on this thing. So substantial control. Think about it. A senior officer, if you're a president in a small corporation, likely your information is going to need to be put into there, right? If you're the chief financial officer, if you're the secretary, the treasurer, things along that nature, you're going to need to be in that. Potentially, if you're a board of director member on a corporation and you have the ability to remove an officer, through the voting process or something like that, probably going to need to be included on there. Individuals, an important decision maker. This is one that's open to interpretation. I'm going to touch on that in the next slide. And then the individual has any other form of substantial control, but it doesn't really go into giving us too much information on what substantial control is. So let's look at question. This is off of the FAQs actually on their website, D3. So one of the indicators of substantial control is that the individual is an important decision maker. What are important decisions? So, and it lines it out, right? So business such as we're able to dictate the nature, scope, and attributes of the business, the selection or termination of business lines or ventures, the entity, we could actually help terminate the entity, right? Like we have the ability to close down our own corporation. With regards to finances, are we entering the sales, lease, mortgage agreements over physical assets? So if you have an office manager that has the ability to enter into contracts for the purchase of equipment or something along that nature, they would be considered substantial decision maker. Their information would need to be reported, right? If you have an HR person that sets your payroll, figures out what the hiring is, how much you're going to pay people, things along that nature. Again, compensation schemes. And it says for senior officers, so that would be somebody that has the ability to dictate how much you're making, not necessarily we're going to hire somebody for $15 an hour. And that they have the ability to restructure, reorganize, and manage. So I think this is the owner of the business, right? Like, and the president, secretary, vice presidents, those people, right? It's not going to be your office administrator for the most part. The one thing that scares me is the catch-all, right? The catch-all that they have is any other form of substantial control over the reporting company. Control exercised in new and unique ways can be substantial control. For example, flexible corporate structures may have different indicators of control. Like I say, err on the side of if you think the person may have substantial control, report them, right? Question I have, and it's been brought up in a couple seminars, is does your spouse or partner have substantial control over your business administration? Right? I think you could argue it either way. Like I'm an S Corp, I'm a law office, so 100% of the stock are owned by Steve Schroeder. My wife can't dictate policy to me because that'd be infringing on my practice of law, but she is my wife, right? Like, so, where are we going to go with that? So I think what I'm going to advise people is that you report yourself and your spouse. And we'll get into the spouse a little bit more on the next slide because that talks about ownership. So this is substantial control. And remember, we either have substantial control or ownership or both, but any of those categories make us have to report the person, right? So 25% control, right? So reporting companies are required to identify all individuals who own or control at least 25% of the ownership interest in the company. Any of the following may be ownership interest. Equity, so this is your stock. It could be voting rights. This is your memberships. Your membership are managing members under your LLC, profit interest, convertible instruments, options, or other non-binding privileges to buy or sell. So a lot of questions in this. And like I say, I think just like under the PPP loan, where they came out with their FAQs, and then you saw that FAQs updated every few weeks as to new questions and answers. I think we're going to start to see a lot of that come 2024. As there's just a lot of questions like privilege, non-binding, which means it's, you can't force me to sell it to you. Privilege is to buy or sell. So let's say I'm in a partnership. I have my practice, my law practice, right? And I bring on an associate and I say, hey, look, over the next year, you'll have the right, but it's a non-binding right, that I could sell you 20% of my S corporation, right? But I have it in a written agreement. Does that person need to report now, right? It's a non-binding buy, sell, if it's, say it's 25%, sorry, I said 20%. But if it's 25% of the practice, do I need now to report my associate's information on this form? And I'd say based on this, yes. And so, like I said, I think in the next year, we're going to get the FAQs on what needs to be reported. Hopefully a little bit more clarification on this stuff, okay? Again, on their information that they put out on the web, they have a nice little flow chart for us. Makes it a little easier for us to take a look at. Think equity, stock, voting rights. That's your corporation, your C corporation, your S corporation. Capital or profit sharing. That is going to be your LLC. Convertible instruments. These are going to be the contracts that we're going to need to look at. Any instrument convertible into equity. So this might be a stock option in your business or something along that nature. Option or privilege. Any put, call, straddle. This gets into public companies more. Or privilege of buying or selling equity, stock, or voting rights. So this, again, the privilege of buying. This is the one that's going to concern me because a lot of us are legal professionals, medical professionals, dental professionals, and we're thinking about bringing associates in, and under that associate contract, we may have the right for them to buy in under certain terms and conditions. Does that trigger a reporting requirement for us? And again, my favorite, the catch-all. And the ownership or control 25% is a little bit worded different, right? So it's any other instrument, contract, arrangement, understanding, or relationship, right? Relationship. Am I married? We're here in California, which, well, most of us are, a community property state. Technically, half of what I own is my spouse's, right? So if I own my S corporation, 100% of the stock are in my name because I'm the attorney. My wife, technically under community property law, has a 50% equitable right into that business should a divorce or something occur. I'm going to need to include my spouse on my reporting requirements. So, like I say, I think in the beginning, and at least for the first couple of years, we're going to all err on the side of caution. We're going to report every company we own unless there is a very specific and tied out exemption to it. We're going to report all the officers, the directors. We're going to report all the owners that have 25% and potentially their spouse, right? I don't want to get into the math, but let's say I own 40% of a business. Do I need to include my spouse under community property rights? I would say err on the side of caution. Each of us, if we went through a divorce, would get 20% of the business, but 40% is in my name. So I know I have to report, but maybe she doesn't own 25%, but she might have substantial control. Is there a buy-sell agreement? Things like that. So I think the biggest thing I wanted to get out today is we're going to err on the side of caution when it comes to filing these. We're going to report our businesses. We're going to report ourselves. We're going to report all the officers and directors on there because a lot of our companies that we set up, we recommend having the spouse as a director. So we're going to report them anyways. We're going to report the owners, right? Again, the whole reason we're doing this is to avoid that potential $500 penalty per day. Okay, so this is the easy part now. What do we need to report? So this is pretty straightforward, right? For the reporting company, our business, we're going to report the name of the business, any DBAs that we might be conducting business under. So law office of Steve Schroeder, doing business as taxadvice.com, right? So any DBAs that we might do. Our current address, obviously the jurisdiction, California corporation, and then our identifier numbers, right? So basically your tax identification number, your EIN number. So that's going to be the corporation. It's pretty much straightforward, right? You get all that information off the tax return. And then the beneficial owners. Again, this is going to be pretty straightforward. It's the full name. So I would match up the name to the document that you're going to need to provide, as you see below. Date of birth, the current address, which will be important as we talk about it in a second, and then a unique identifier, identifying number and jurisdiction form. So I think for most of us, it's going to be the California driver's license, right? It's the most easy. The most of us should have it on us at all times. I don't really want to put my social security card or something like that, and then my social security number out there for potential fraud reasons. So I think most of us will probably use our California driver's license, and if we don't have that, a U.S. passport. So like I say, the information needing to be reported seems pretty straightforward. I can't confirm how it's going to be yet because FinCEN has not actually put out the form online yet. They're still taking questions and answers on it, but these seem to be the relevant things that they're going to be looking for. What form it takes, I'm not exactly sure. The big thing is when we're submitting these, we're going to need to upload a copy of the document that we're using as our identifier. So I think it's something that we could start getting ready if we have multiple people in our businesses to start gathering this information, getting copies of their driver's licenses and stuff like that, so that when it comes time to submit, we could just upload all this stuff and be done with it. Okay. Partially done with it. Let me backtrack, because here's what we get in the next slide. Change in information. So I think my personal belief is that the initial reporting is going to be pretty straightforward and easy. The upkeep is going to be a nightmare. So the way the law is currently written is that if there is any change in ownership, contact information, anything like that, we now have 30 days. That starts a trigger point. We have 30 days from that event to update FinCEN on this. If we do not update within those 30 days, then at day 31, potentially that $500 penalty starts to accrue. As a tax preparer, what my big worry is that we file it, you come in to do your corporate tax return March 15th, right? And you have all of our individuals who get the K1s on there. And we file March 15th. And then I don't see the person again until March 15th of 2024 or 2025, right? The next year. And they come up and go, oh yeah, I forgot to tell you, one of our partners, our shareholders, or I moved. When did you move? May, right? May of 2024, and now we're in 2025 in March, and we're looking at 8 months, 240 days, $500 per day penalty. And I have to say, hey, look, when we file this, potentially the government's going to come after you for a $120,000 penalty because we did not update within that 30-day period, right? So this is why I want to get this out there. I think we have to condition ourselves as to initial filing, and then every month we have to sit down and say, did something trigger that needs to have me update the form with the FinCEN? Because if we go 60, 90, 120 days, I mean, just divide by 2, and that's your penalty. I mean, in thousands of dollars, that's really substantial, and it's burdensome, right? For something that's fairly easy to fill out, but may be complicated because of life and everything that's going on, to remember to update. So again, here's what needs, any change to the information reported for the reporting company, such as registering a new DBA. Maybe the corporation is lease expired and they move over to the unit next to them. We closed down, not closing down the business, but we added on a new shareholder, anything along there, right? A change in beneficial owner, such as a chief executive officer, a sale that changes who meets the ownership thresholds, or the death of a beneficial owner, right? So I pass away, my stock goes to the trust to, and gets sold, new beneficial owner. The trust, the new trustee of the trust potentially has to file. So a lot of things are going to be triggering events that we need to be aware of as we start going into the year, right? Any change to the beneficial owner's name, address, or EIN, past things like that, our EIN, social security number. Where I think this is going to come up is, California is notorious for divorces. So I'm married, I end up getting divorced. Now there's going to be a change in beneficial owner's name, potentially, right? There could be a new address for that beneficial owner, as we're not sharing a house anymore. What happens if our California driver's license that we uploaded expires, right? And we get a new one. We have to upload that within that 30 days. It's just a lot, right? Like, there's a lot of things that could trigger the new filing. And I think the thing that's most upsetting to practitioners, and should be for a small business, it's not a once a year filing requirement. We file our taxes once a year. We update our statement of information once a year, right? Our FBAR, foreign bank account reporting, is a once a year thing. This could potentially be, under the worst circumstances, something that's done every month, right? Like we have 10 owners or something like that, and people are moving and changing and doing things like that. So I think it's something we need to be really aware of. And I don't know what the answer really is going to be for individual business owners. Do they put a thing on their Outlook or Google Calendar, at the end of every month? Did something change? Just to, trigger a thought in your brain that, whoa, do I need to review something, to find out if there's a potential of having to update the FinCEN BOI reporting requirements. Okay. And then we already talked on the penalties. I can't stress, whoops, sorry. I can't stress enough the five, I said, I don't think much is going to be criminal, you know, being prosecuted for criminal prosecution the first year, right? It's something, it's all new to us. I'm more worried about the $500 per day civil penalty. And, you know, if we get hit with that, and then as the time goes on, then maybe start to worry about the criminal. Like, I mean, with the FBAR, it's usually big cases that get criminal penalties and stuff are knowingly, intentionally trying to hide things. I think you'll see this probably more in the context of organized crime or something like that, where I'm going after people to try to get a criminal sentence on it. I think for Joe Average, we're worried about that $500 per day penalty. A lot of information is coming out. I got most of my stuff off of the BOI Small Business Compliance Guide. It's through FinCEN. I have the the websites up here. They got their FAQs. Again, this is updated monthly, so you can go there. And I think that's what's going to be pretty helpful for us as we go forward, is just to keep information in front of us, find out what's going on, see if there's any new interpretations as to the law. But that's pretty much what I wanted to go over. I'm going to open it up for any questions that we might have. So I'm going to stop sharing the screen and see what might be in the chat as far as questions. And then, like I say, I think what will happen is sometime, I would guess after April 15th, we'll probably do an update on this, for what current business owners that have their businesses in 2023 need to be doing and gathering for their filing requirement by the end of the year. So I hope it's been pretty helpful for you. I know there was a lot of questions, at least when I took the class and stuff like that. Some people submitted some questions to Katie as to what businesses need to report, whether our Schedule C filers need to report. I'd say no, because the Schedule C is not registered with the Secretary of State. So Schedule C filers, Schedule E's, where you have your rental properties on the personal tax return, don't need to be reported, but maybe the disregarded LLC, which I have ownership interest in, that would have to report, but not my individual Schedule E's. So any questions on that? So like I said, we got some time. Be glad to answer them all. If you want a copy of the presentation, just so you have it, just email Katie, and we have it as a PDF, not a PDF, maybe it's a PDF. I think it is a PDF, but we'll send it as a PDF or a PowerPoint presentation to you, so you could have it, so you could review back on some of the information. Always, if you need to talk about your individual circumstances, just give a call, talk to Katie or Jamie in the office, and she can set up a time to see, what you need to report, when you need to report it, who you need to report. I'd be glad to talk to you about that. People have asked, like, what are we going to charge for this? I hate to always talk about prices because I have no idea. I don't know what the form looks like online. I'm not exactly sure how we're going to do it for clients that wish our assistance yet, because my biggest concern is what I expressed. What happens if you move or change something in June and we don't hear back from you, right? And then the penalty accrues. Who's going to be responsible for that penalty? So I think for what we're talking about, Katie and I, is that if we're going to do something, obviously we're going to have an engagement letter, but the client has to acknowledge that we're going to be harassing, I hate to say harassing them or bombarding them with emails or potentially texts to say every month, has anything changed that requires your BOI to be updated? Because I think that's the only way that we as small business owners can be protected from this penalty, right? Is that every month we're triggering a thought, do we need to update? Do we need to update? And hopefully the answer is no, and we just go on our merry way. But you don't want to do it every 6 months, because if you waited 6 months, 180 days, $90,000 penalty potentially, and that could be pretty harsh for most of us. So if there's no questions, I'm going to end this. I think, and I apologize, this is on me. We want to try to do these meetings, or at least some informational stuff for client questions that they have. I know we've been getting a lot of questions about the new bonus depreciation and Section 179 laws, how it might affect our businesses. Also corporate compliance, like updating minutes and stuff like that. If you have anything that you'd really like to get some more information on, or like us to talk about related to tax or something like corporate compliance, Send us an email. If we get enough interest in it, we'll put together a Zoom. I sort of like the Zoom because it's just easier to meet with 10, 20 people and then put it up on YouTube for them to look back at, rather than having 10 1 hour, 21 hour meetings on it and stuff like that. It's just a little bit more time efficient for us. So hope everybody got something out of this. If you got nothing but fear of having to file this thing timely, I did my job. And like I say, if you need anything else from us, please reach out to Katie or myself, and we'll get those answers for you. So if there's nothing else, thank you very much. Have a great weekend, everybody. Enjoy some of this weather, and we'll talk soon.